Hello guys, and welcome to yet another edition of the series that I've entitled 50 Ways to Master US30. If you are a loyal subscriber and follower to this channel, you may have noticed that I've been posting trade setups, reviews on how to master Dow Jones US30, and this is yet another edition. So I'd like to welcome you all. If you are new to this channel, you are at the right place. I would like to ask you to subscribe, like, and share so that we may as well grow and let others benefit as well from the content that I'll be releasing into the future as we look into how markets book and how we can engage them. As you may have already have noticed that price moves because of interbank algorithms that determine price. And if we know how to engage price and what market is currently doing, we are able to place ourselves in the right place at the right time so that we can milk the markets alongside the institutional banks and not trade retail mindset. So I've taken a US30 trade setup pre-New York Open. Today is Friday, 10th of December 2021. I would like to review that trade setup with you so that we may as well benefit from it. So looking at the charts, as we can see, now let me try and go to a bit of a higher time frame. I intended to post or do a review of a trade that I took on the 9th yesterday. It is recorded and only needed to be edited and uploaded, but I've decided to start with this one because it was just a quick setup that won't take time to review. So as we can see, we are in a recovery mode following the crash or following the Omicron variant of COVID-19. Markets have been showing recovery and we have been pushing to the upside. Yesterday I took a very interesting trade, but I won't review it now. I would like to review the one that I took just pre-New York Open today so that you can all see what was my mindset as I went about my business. So when I looked at my chart this morning, this is what I saw. Price had just broken. I'd like us to focus here on this upward move here, this momentum here. Let me highlight it. This upward momentum here that sent price breaking above buy side liquidity that I delineated I think 2 days ago or the previous day. If I scroll back, you will see where that is coming from. Let me go to a bit of a higher time frame on the 15 minutes. We have a high here, we have a high here, right here. This is what ICT, or I've also come to learn to be buy side liquidity. What it basically means is that this level at these levels, at or above these levels here, there is liquidity that is resting above it. In what sense? There are those traders who want to buy the market. I'm not talking of retail traders, but as well, that is the principle that retail traders apply. I'm talking of interbanks. I'm talking of hedge funds. They are trying to buy the breakout here. When they see this, they say this is resistance. They're trying to say the market, they put their orders here, buy stops. If the market breaks above it, their orders are triggered in. And also there are some that view this as resistance. If market comes up here, they want to sell. So let us look at those who want to be buying out of this breakout here. So there's liquidity resting above here. So market, what it does, the algorithm seeks that. Maybe before I go on, let me just give you 3 reasons why price moves, because there are only 3 reasons. Despite what you may have been told, there are only 3 reasons why markets move, why price moves. It moves because it is in search of liquidity. That's number 1. It could be buy side or sell side liquidity. it moves to where liquidity lies. And as we can see here, there is buy side. Market went for that liquidity, and in so doing, it left something that is called, which will lead us into the second reason why price moves. When price made its headway into that liquidity, it left a void here, or a gap, which is called a fair value gap or an imbalance. So that is second reason. Market moves to an area of an imbalance to rebalance it. Then the third reason, it is pure manipulation from the institutional banks. By institutional banks, we are talking of the central banks. We're talking of the Bank of England. We're talking of the Bank of Australia. We're talking of the Fed. These are the institutions which trade these markets by using very complicated algorithms that move price. So I do not want to go into those algorithms at the moment. I just want to highlight again the reasons why the market moves. We said because one, market moves to an area of liquidity. It could be either buy side or sell side. Number two, it moves to either rebalance a liquidity void or an imbalance. The market seeks to rebalance it. Like what just happened here is market reached for this liquidity that lay up here. It moved, but in so doing, it left a gap here, fair value gap or imbalance. So market at some point would have to retrace back into it and rebalance this because it was not balanced. There is no enough buying or selling that took place here. Market just shot up, did not allow the algorithm, institutional sellers to sell into this. So market balances. Another third reason, pure manipulation. Sometimes you just can't explain it. Markets or institutional banks, they use it to maybe reprice a certain market to certain levels that they want. That is why sometimes you may see that figures come on NFP that are positive, but yet that are positive for the dollar, and yet you see the dollar still crashing. That explains sometimes that institutions could be manipulating the price to a level that they have already predetermined. So as I was looking at my charts here, I saw price run into this imbalance, which I'll bring up again. These two levels here, price ran into it and it left a void, an imbalance down here. So as market went up here, I was looking for this level here to be traded down into. I was looking for this level to be traded down into. So I was willing to sell up here. Some may wonder, why would you sell in the market into a market that is screaming high? It is all about order flow, folks. If you understand what the market is doing at a particular time, then you'll be able to engage it. So without further ado, I'd like to bring up the video, the recording of the trade setup that I took so that I can talk you through it. Here's the video. Let's play it. So you can see me there. I've already placed my limits here, not my limits here. I've taken my orders here, and I decided to add here. So I'm typing something here. Let's just walk through it. Pre-market, open scalp, low risk setup. Let's just look at it together, and I'll explain as we watch along. Should market decide to keep pumping higher? I have a small stop loss. That won't break the bank. So after I noticed this, what has just happened here, let me pause it. I waited for price to break below this level. Let me bring up the current chart and go to the 1 minute, because this trade setup was, I took it on the 1 minute. I'll also bring the executions for us all to benefit. So this is on the 1 minute. Let me bring up the video again. You can see this is the setup here. This is the setup here where I took my entry point. I'll bring up the chart again, the current chart, price chart. This is where I entered. Let me put back the executions, so you can see it for yourself right here. I took a sell here. I took a sell here. After I seen price break below this level, for me that was confirmation. Price was now looking to fill that gap that we made reference to here. On a higher time frame, it is this one here, this imbalance. I saw price wanting to fill this one. So even though price was screaming higher, for me, at some point after taking this liquidity here, after the institutions had sold here to the buyers who were waiting to take this level higher, they sell. Remember, the institutions were riding this level all the way up here. They knew there were people who would be willing to buy from here. So they are in a buy. So how do you get out of a buy? You sell it, right? So you sell it to a willing buyer. So when they get up to this level here, they sold it. And then when sold it, they again take a position here to go down, to go lower. So that is where price would be going here. That is what I was looking at on the grander scheme of things. So those who were hoping to buy the breakout, they will be the ones then who would be having to carry the load. That won't go anyway, because the institute price moves because of a certain algorithm that is manipulated and 100% controlled by the interbanks. So again, let's go back to the 1 minute chart. Let's go to the execution I'm referring to. So as price broke below this level here, I sold, and I've highlighted it as order block here. So I'd like us to go back again to the video. I'm going to speed it up a bit and explain a few things as we go along. So you see me, I'm already in my order. My stop loss is in place. I trade with a stop loss always. So I'm going to explain why I've got my take profit at this level here. Sell side liquidity, I'm looking for price to drop. So I'm just moving forward. You see me highlighting this level here as my order block. That price broke and came down to it, or to sell right here, right at this level. That is an opportunity to go short right here, targeting this level down here where my take profit is. At this moment, I don't expect price to push further into the buy side, because the algorithm, the order flow has changed now. Currently, remember, this is a very short range that I was targeting. Let's keep watching. Let's keep watching. I'm highlighting something as well here. So I've got sell side liquidity here. Let's keep watching. Price having done its business up here, now showing willingness to drop. And I'm highlighting something here. I'm saying that the structure that I'm banking on currently is based on idea that We just took out buy side. That's what I was saying. We just took out buy side liquidity. You can see me type it there. And price ought to retrace. Why? That is what I'm now explaining now. Price ought to retrace. Why? Let me pause and go back to the charts. After taking this again, we've just said it, taking this buy side level here, you can see it here in the corner. Price ought to retrace because now it has left a void and an imbalance here, this level here that ought to be rebalanced. So that is the second reason why it moves, or second reason why price moves. The first one was liquidity. Price sought liquidity to the up and it took it here. It went a bit up to make sure that it has sucked in all the breakout traders. Make sure it has sucked them all in, then drop. So that's what price was doing here. Let's go back to the video. I'll talk over it. I'm highlighting here what I was mentioning just now, that it has taken just this, it has just taken these levels. So price ought to drop now. I'm going to my higher time frame. This is what I'm banking on. I've got an order block here. Because remember, everything, folks, is based on the higher time frame. Even though you may be operating on the micro structure or the smallest time frame, but you do well to ensure that your trades are based on the higher time frames. What price, the overall price structure. So as we can see, we are bullish, but that's the overall price structure. But currently, price is in a short-term retracement here. So that is what I'm highlighting here. So overall, I'm looking for price to go up. But before then, I'm hoping to catch this short-term, a short retracement. That's what I was saying there. Let's move a bit again to see how the trade went or panned out. Now, I'm mentioning something that's very important here. Sometimes all you need is just those few pips. It's all about how you use them. Let me pause. Let's go back to the charts. Having recognized that actually we are in an uptrend and price has left a gap here, which is not a big area if we look at it. It's because indices move very briskly and have very big ranges. Let's just look at this gap. It's about 70 pips, 77 pips, right? So I'm saying here, sometimes this is all you need. This is all you need. This is your bread and butter. This is what you wake up to do this day on a Friday, the 10th of December. And once you're done working this level, once price comes down and feels it, you are done. Your day is done. So that is what I was mentioning. So it's all about how do you use it. Now that you know what price is going to do, how do you use it? And you know that you are in a low risk entry. You have caught the price swing here at the top. Now you want to ride it to this level. So sometimes you because you are scalping, right? You load up and you dump it right here, or just below it gets to these levels. You dump it. That's it. Your day is done. Your trade is done. Let's go back to the video. Let's pray. Let's keep watching. And price pushes back again into this level. Look at what I said here. I said buy, but you know I was selling, right? I really meant to say sell here. As price pushed back up into this order block here. This could have been a level where you could have sold again right here. If you missed this original one, you could have sold right here. Let's see what price does. I'm now mentioning that gap we spoke about earlier, fair value gap. Let's look at the annotation that I made. An imbalance in price that must be rebalanced. The fair value gap, right? That's my definition. That's more or less how ICT defines it. So I'm looking for this gap here to be traded into, to be rebalanced. So let's watch. Right here, I'm taking my first partial here. As you could see, look at my exit here. My first partial scaling right here. Let's squeeze it back a bit, 10 seconds. Right here, you can see right here. Taking my partial here. As you can see, right at this level here. Then I lower my stop. Now I'm almost riskless, risk-free, in a risk-free trade. So I've left something. I still want price. I'm still hoping that price will drop to this level. I've removed that fair value gap because I try and I like working with clean charts. There we go. Sell here. Again, I'm selling. You could sell right here. As I'm looking at the market structure and order flow, right? This is what we are dealing with. You could sell right here. Again, if you missed this one, if you missed this one, if you missed this one, if you miss this one, you can still take a trade here. And your range is very short. Let me pause. Go back to the charts. The 1 minute. Like I was saying, that sometimes that's all you need. A very short range. This is where you missed this first order block, you missed this second one here, then price comes back up here into this one here. It was somewhere here. Let me put it back from here. From here, one could sell. So as price drops and pushes back into this level here, that was a nice selling opportunity because you're still targeting what is down here in this level here. Let's see what happens. Let's see what happens. This was my first partial, as you can see. I took that first partial. Let's go back to the video. And let's play. Here I'm correcting what I meant to say earlier here. I meant to say sell. Remember when I said I wrote buy? I typed buy when I meant to say sell. Price is doing what it's doing. Yeah. My stop is still in place. Even if price takes me out now, I've already banked something. I don't care. Right? So I don't move my stop. I don't get scared when I see price briskly move up here. Because I know the market structure that we are working under. See that sell how it panned out now? If you had sold here, you would have dropped right into your take profit level without wasting time. So that's exactly what happened, folks. Let's see what I typed. Most of the times, all you need is all you need, folks. That small window of opportunity that you can use to your advantage. This indeed was or is a small window of opportunity here. If you realized what was happening here, you could have made your day or your week even one shot, one kill, as ICT calls it. Let me go back to the live chat. Let us look at what price did after that. After having been checked out here, my take profit here, the last remaining portion of that trade, we were in this kind of setup. This was the imbalance. You can see how it's been traded, through. I try and exit trades before certain levels because I've noticed in my dealings with this, especially US30, times it kisses then turns, then you're left out. So it's better those few pips that to miss out on those few pips than to lose the whole setup altogether. So price came down indeed. This was our structure. So do I really care what happens if price kept pushing down further? Because if you look carefully what happened, after taking this level, price went back up. Price went back up. Let me highlight it. Let's go back to the 1 minute. But this was my last portion here of the trade. Let's bring it back again so that we can all see what we're making reference to. Look at this level here. Its price hit here and took me out by means of profit taking. Price immediately, it took me out here. It made an attempt to go lower, but then it went back up almost all the way to the original entry here. Would you have stood for that? Even though it kept dropping now, this is the new setup you'll be looking for, but I don't really care what happens after. Here is a loss that I took here. I tried to buy into this setup because I thought this was done. It came in and took me out. But this trade that I had managed to figure out and determined a very short range, and then you hit it hard. That's all you need at times, folks. Order flow and knowing what the big boys are doing, the interbanks, the smart man, knowing what they are doing at a certain point in time. So again, the three reasons why price move: imbalance, that is to fill a void, a fair value gap. Liquidity could be either buy side or sell side, or it could be because of pure manipulation. Sometimes they could be repricing from the institutions because they want their currency to be at a certain level. They just reprice it, making use of especially big news events like world events. Then they reprice their currency to a certain level because they are allowed to do it. It's their product. They can do whatever they wish with it. So I do hope you found value in this brief review, and I hope you take lessons from it and go into your charts and start digging. And as you look further and deeper into it, I wish you success and good trading. And until we talk next time, keep trading safely and hope you find the best in all you are doing. Take care now. Later.